Hello everybody. In this video we are going to discuss about India's 41, that is agriculture. So agriculture. This India's prescribes accounting of items, agriculture activities. So what is there? Means applicability will be biological assets, agriculture produced at point of harvest, and government grant as defined in India's 20. Yeah, what is meant by biological asset? Biological asset means we need to exclude only the bearer plants. We need to exclude the bearer plants. It means living plants, like we have whatever the plant, maize plants, jowar, wheat, or crop, rice crop, paddy, cotton crop, whatever the plants are. And living animals also. Living plants are living animals like livestock, whatever the goat, sheep, buffalo, cattle, etc., producing, growing, and bearer plants. These are main, but except bearer plants. Now agriculture produce at the time point of harvest, means harvested product from biological assets. So harvested from biological asset. Here output of biological assets, simply if we take biological assets. So if we take here animals, means buffalo, cow. So that buffalo's milk, or that cow's milk, or sheep, if we take sheep, wool of the sheep, or cotton plants, cotton from this wool, the output from this biological assets, output from this biological asset, it will become the agriculture producer. And after that government grant on this biological asset. This is the main core area. Now this index is not applicable in following items even if entity is engaged in agriculture activity. So it will not applicable to bearer plant. It will not applicable to PPE also, property, plant and equipment, or investment properties, whatever. And it will not applicable to intangible assets. So 38 intangible assets was there. For example, here bearer plants. Bearer plants means living plants which are used in the agriculture, produced for more than 12 months. So here biological assets means simply it is living plant. For example, if you take no, I am not wood. So living plant is there. This living plant is a living plant producing some agriculture product which will take more than 12 months. For example, fruits from apples from apple tree, rubber trees, etc. So it will become India 16. Or another property or agriculture activity. Properties means like land or tractors or whatever it may be. Next, intangible assets. Intangible assets means here it may be getting license for doing the agriculture activity. India is not applicable for these cases. And if the government grant related to bearer plants, so other than bearer plant it will be applicable. Bearer plant India 41 is not applicable. Then government grant of bearer plant is also not applicable. Only the government grant related to this biological asset will be applicable. Now how we can account for this biological assets? This standard apply to agriculture produce which is harvested produced on entity biological assets. So for these biological assets, how we can account? Firstly, biological asset is initially recognized at a fair value. How we can recognize it? Biological asset will be recognized at fair value. Biological asset will be recognized at fair value, and initially recognized at fair value less cost to disposal. Or here then the entry will be biological asset will be debited always to whatever we are paying to bank account, first entry. and if we are getting any gain, to gain it will become. If we are getting any loss will be debited. That is the entries will be there. Now fair value less cost to disposal. Fair value less cost to disposal means what here? Whatever the sale price of biological asset, sale price of biological asset, from this we need to deduct the transportation cost to transport the asset of action place borne by the seller, who is seller. And now we will get the fair value of biological asset as per Ind AS 113. This is fair value of biological asset. Now we need to deduct any cost to sell is there. Cost to sell, that is transaction like action or fee borne by the seller. What? By the seller. Next we will get the fair value less cost to seller. What we are done here? Only the transportation cost of seller, this cost to sell borne by the seller we are deducted. So if the question states that only the one, not explained anyone, we need to take only one person expenses. Specifically they mention we need to consider both persons expenditure. Next if that is fair value of cost to sell. Now whatever the total payment to buy the biological asset will be, biological asset whenever we are buying, purchase price plus transportation cost borne by the buyer, so borne by the buyer, plus transaction cost borne by the buyer. So here what we are doing, if it is fair value less cost to sell, for that sale price, from this sale price we are deducted the transportation cost, we are deducted the transportation cost by the seller, transaction cost by the seller. For purchase price we are adding, for fair value to fair value less cost to sell we are deducting. Now if fair value less cost to sell cannot be measured reliably, then entity can initially recognize the biological cost as cost. So whenever we are unable to recognize the fair value less cost to disclose, we need to give the cost effect. Cost effect will be provided. Now cost will be provided. Now if the subsequent recognition at the balance sheet date, initial recognition at a reach reporting period, we need to check out the values and gain or loss from biological assets. No, government grant is last. Now same, if we are in subsequent recognitions at each balance sheet, at each reporting period, we need to check out the balance. So biological asset is measured at new fair value less cost to sell, value to less to cost to sell. Here if the asset, here we are calculating fair value less cost to sell. Now except this case, but if here it was happened, there is increased or there is decreased, options will be increase or decrease. Then increase means biological asset is increasing to gain. If decreasing means we are getting the loss account debit to biological asset. Now whatever the fair value loss cost to sell of a biological asset change due to price change and physical change in biological asset, we need to know which change it is, a price change or physical change. Next after that, change will be change in quality, measurement changes or capability to changes what happen. Now for example, recognition of newborn calves is there. So means if we have management is changing capability, agriculture activity, biological transformation was happen. So for this I will give one example, you will get the clearly. Biological exam means here we have some new born calves will there. Now whenever the newborn clause are recognized as income in profit and loss account at fair value less cost to disposal on the birth date. So on the birth date we need to recognize the income. So biological asset account debit to same gain on born, that is it will become the physical change. That change was happen, physical change was happen here. And after that whenever we need to de-recognize the biological assets. So here we are talking about recognition. Sometimes it will happen by de-recognition when it is sale of animals. Then we are getting the amount bank account debit to whatever the sale value of asset, that is biological asset books is there na, carrying amount, proportionate carrying amount we need to deduct. If we get the gain we need to create, if we get the loss we need to debit the value. Some cases if what we had done, if the born was happened we recognize it as gain. If death was happened, what we can do, we need to recognize the loss, that is loss on death of biological asset. To biological asset we need to reduce to the proportionate carrying value of biological asset died. Some cases on conversion of biological asset into agriculture produce, converting biological asset into agriculture produce, agriculture activity we are converting it. So whenever we are converting, biological transformations was there, converting the asset into agriculture produce from biological asset or from agriculture produce. Now conversion of biological asset, then we need to recognize that agriculture produce we need to debit, means it will the inventory, simply it will known as inventory account debit to biological asset. We are need to de-recognize the biological asset, we need to de-recognize. If it is the loss, debited, gain credited, whatever the amount we are paying bank amount, conversion cost for like slaughtering cost, whatever cost paid. Now recognition of expenses. So what are the expenses we can recognize here? Expenses are incurred on biological asset for their growth. So for the purpose of their growth, we are incurring some expenses, or for the purpose of their maintenance we are incurring some cost like food cost, breeding fee, fertilizer, seeds, etc. So these are also recognized as expenses in profit and loss account. So profit and loss account we need to expenses, we need to recognize it. Now we have agriculture produce. So how we can account this agriculture produce? Agriculture produce is initially recognized as income in profit and loss account at its fair value less cost to sell. Means simply whatever the agriculture produce account debit to gain on initial recognition, at subsequent recognition of each balance sheet we need to check out na. So agriculture produce is measured as per Ind AS 2. Now we will calculate it to as per Ind AS 2 inventory. Now if the asset relating to government grant for biological asset, then if government grant for biological asset, the grant was which is unconditional, then all that is non-refundable, then simply directly immediately transfer it to profit and loss account. Simple case. If government grant on biological asset is some conditional, some conditions was there, and the conditions have some refundable, it was there some refundable. The refundable will be maybe fully refundable or partially refundable. If it is a fully refundable in case of failure to meet the conditions of the grant, then we need to recognize deferred income in balance sheet and transfer it to P&L when all conditions grants are met. So in balance sheet need to recognize the deferred income, and in profit and loss we need to transfer it to profit and loss account whenever we met the all conditions. If it is partially refundable according to time lapse, in some case failure to meet the conditions, recognize grant as deferred income in balance sheet, transfer it to profit and loss account over a period of time. So first year sum, second year sum, third year sum, you need to transfer the amount. It is relating to government grant for biological assets. This is the main core area of investment India is 41 agriculture. Now what is the summary for India is 41? Simply we started with the definition. This India is prescribed accounting for the areas of like biological assets. Biological assets is layer except bearer plants. Biological assets means simply living plants and living animals, that is living stocks. For living plants it may be plants, different plants. Agriculture produce means it means harvested product from biological asset. From this biological asset whatever we are producing, that will become the assets. And agriculture produce government grant on biological asset also we are discussed. This India does not apply to some items like PPE, poverty bearer plants, PPE, intangible assets, some other assets. Accounting treatment, how we are recognized. For initial recognition, we recognize the biological assets debit to bank account. If it is loss, we need to debit. If it is gain, we need to credit. And for the fair value of loss or assets, fair value of loss or assets, we are discussed about the fair value of assets. So if it is point of view of a seller or buyer, we need to check out. So for amount, if it is relating to fair value less cost to sell, fair value less to cost, we need to take the sale price plus minus sale price minus transportation cost minus transaction cost. If it is purchase price of biological asset, purchase price of biological asset plus transportation related cost plus transaction related cost. And subsequent recognition also, biological asset is remeasured at new every reporting period. At each reporting date we need to remeasure the fair value of loss. If it is increased, we need to add to biological asset gain. If it is loss, we need to deduct the amount. Now the assets, if the any asset was taken, then we need to recognize the income. If any death was happened, we need to de-recognize the amount to the extent of proportionate amount. Or if we are converting that amount of biological asset, then agriculture produce will be happen. Agriculture produce will be initially whatever the amount, we need to check out biological transformations, we need to check out. And after that accounting agriculture produce recognition initially recognized as income in profit and loss account, whatever the amount. And after that we are discussing about government grant related to biological assets. We need to see is there any unconditional or unconditional. If it is unconditional, then it can directly transfer to profit and loss account. If it is conditional, the conditions will be the fully refundable conditions or partially refundable conditions. Fully refundable, then firstly transfer to deferred income in balance sheet. Whenever we are satisfied the all conditions, then only we transfer it to profit and loss account. If it is partially conditions, how some conditions was related to like expenditure, so we need to transfer it to P&L over a period of time. Now after that, simply what includes in this assets, what is biological assets. So started with biological asset means what the examples, agriculture produce examples, and the produce that are result from processing of after harvest. So biological asset means sheep, and agriculture produce means wool. Product that are result of producing after harvest, it will become yarn or carpet. Trees in timber plantations, felled trees, logs or lumber. Daily cattle, dairy cattle, milk, cheese, pigs, carcass, or skewed hams. Some examples was provided there. This is properties agriculture Ind AS 41.